Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings, and sometimes we find out that a company is actually selling a lot of stock really fast. Today we're diving into a recent filing from Oklo Inc., the company involved in nuclear energy. This isn't their most detailed financial report, but it tells an interesting story about how they're funding their ambitious goals. Oklo Inc. is a company focused on developing advanced fission power systems. Think compact, efficient nuclear reactors. They've been working to bring their technology to market, and this report gives us a peek into how they're raising the money needed for that big vision. This particular filing is a Form 8K, which is like a public announcement for significant events that happen between their bigger financial reports. It's like a company's way of saying, hey, something important just happened you should know about. So what's the big news? Well, Oklo has been actively selling its common stock. They filed something called a prospectus supplement, which is basically an update to their plan for selling stock. They've been doing this under a shelf registration statement. Think of that like a pre-approved menu from the SEC that allows a company to quickly offer and sell its securities over a period of time without having to file a whole new registration each time. It's a way to be ready to access capital markets when needed. They are using something called an equity distribution agreement with a few investment banks, Goldman Sachs, Bova Securities, B, Riley Securities, and TD Securities. This agreement essentially allows these banks to act as agents and sell Oklo's stock on their behalf in the open market. It's a common financing tool for companies looking to raise significant capital. Previously, Oklo had a plan to sell up to $400 million worth of stock. They've now put out a new filing to update this. They've already sold a good chunk of that. As of September 3rd, they had already sold over 54 million shares of their common stock. This program has brought in about $400 million. That's a serious amount of money raised through selling ownership stakes. With this new filing, they are now saying they can sell an additional amount up to roughly $140 million. So in total, this program is designed to allow them to raise about $540 million by selling their stock. That's really the core of this report. They're not announcing a new product or a regulatory setback, but rather an update on their ongoing capital raising efforts. The filing also mentions that their lawyers Latham & Watkins LP have provided a legal opinion. This is standard procedure for stock offerings. It essentially means the lawyers have reviewed the issuance of these new shares and are confident that everything is in order from a legal standpoint. It's a necessary piece of documentation, but not the most exciting part for us. It's also worth noting that Oklo is identifying itself as an emerging growth company. This means they are a relatively young company and they get to follow some different rules that are a bit more flexible for companies that are still growing and not yet fully established. This can include having fewer reporting and disclosure requirements. It's common for companies at this stage of development. Now, let's talk about what this really means. Oklo is a company with a big technological bet on nuclear energy. Developing and deploying advanced nuclear reactors is an incredibly capital-intensive business. You're talking about research, development, manufacturing, regulatory approvals, and then the actual construction and operation of these complex facilities. So when you see a company like Oklo actively selling stock, it's a clear signal that they need that capital to fund their operations and their growth plans. They're essentially financing their future by selling pieces of the company today. From a Warren Buffett perspective, we'd want to understand why they need so much capital. Is it for essential research and development, which is generally a good use of funds for a tech company? Or is it to cover operational shortfalls if their expenses are outstripping their revenue? In this case, it's likely the former given the nature of nuclear energy development. Think about it this way. If you were building a car factory, you'd need a lot of money for the land, the buildings, the machinery, and the startup costs before you even sell your first car. Oklo was in a similar position, but with nuclear reactors which are even more complex and have longer development cycles and higher upfront investment. The fact that they are raising substantial amounts of money through stock sales indicates confidence from investors that Oklo's vision for advanced nuclear power has merit, and that these funds will be used effectively to advance their projects. However, it also means the ownership stake of existing shareholders is being diluted as more shares are issued. This is a delicate balance for any company. They need capital to grow, but too much dilution can make existing shareholders less happy. Investors in Oklo are essentially betting on the company's ability to eventually deliver on its promises and generate significant returns that will far outweigh the dilution they experience today. The key question for Oklo and its investors is execution. Can they bring their technology to market efficiently, cost effectively, and safely? This stock issuance provides them with the fuel to try, but success is far from guaranteed in such a groundbreaking industry. So to wrap up, this filing isn't about immediate financial results in the traditional sense. It's about the financial strategy to fund a very long-term and very expensive vision. Oklo is actively engaging the market to ensure they have the resources to pursue their goal of delivering advanced nuclear energy solutions. What are your thoughts on Oklo's financing strategy? Do you think raising this much capital through stock sales is a good sign for their future in the nuclear energy sector? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. Don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we'll see you in the next decoding.